I was watching Jay Powell's presentation this morning at 4:30 a.m. After all, what else did I possibly have to do? And I was listening to the questions and the discussion between the correspondents and Jay Powell. And it occurred to me that what Jay Powell thought was really important about the data that he was presenting was really very, very different than what the journalists and the market thought was important about what he was presenting. What the journalists thought was important about what he was presenting was inflation. After all, the Fed increased its inflation estimate from this year from the headline inflation PCE from 2.4% to 3.4%, and the core PCE from 2.2% to 3%, even though it dropped its estimates for next year and the year after to exactly where he thought it was going to be in 3 months ago. And the reason that Jay Powell said that he thought that was going to happen was you had these short-term bottlenecks because of the rapid recovery and things like lumber, which had gone up to the highest price ever, but was now, and actually fallen by 40% in the last month, that those things would come back and there would be to a lower level, those prices would come back to a lower level, and that this was really just a short-term effect and you would get down to long-term inflation. And one journalist suggested, well, doesn't that take, if those 3 years, the average of inflation is higher than the average, higher than your target, and the wearisome look on Jay Powell's face when he said, well, last year we started saying that we were going to have inflation above our target for a considerable period. So really they're just delivering on the scenario that they were providing at the end of last year. And if you look at the effect of 3% inflation and you don't move the Fed funds rate from 0.1% for this year and next year, that means that the real interest rate is lower and the amount of stimulus to the US economy is greater than it would otherwise have been. And that's where you get to. But what Jay Powell thought was important wasn't any of those things. He thought that what was really important was employment growth. And he said a few times, what we are looking at is really strong employment growth. And the kind of employment growth that we haven't lived through this kind of thing before. And it's absolutely the case, and employment growth is much more rapid in the US than it was after the financial crisis. I think in my quarterly, I show that it took 8 years and 10 months after the financial crisis to get unemployment down to where it currently is in the recovery from this. I'll talk a little bit about the difference between the Australian recovery and the US recovery, and why, even though the US recovery is really, really good, as the Australian recovery is even better, and the fact that the US recovery is a little bit slower means that recovery has to be more extended, which is why the Fed has to keep rates lower for a longer period in the future. Last week I was showing a couple of people the difference between how employment growth is recovering in Australia. And Australia employment growth is almost fully recovered, well, has fully recovered from the beginning of last year. But if you look at US employment, it's about 2% lower than it was at around about the same period. Jay Powell was asked about that and how we deal with that in terms of economics. We talk about participation rate, the proportion of the people in the labour force in the US is about 2% lower than it was in 2019. 2%. So, for example, if the US unemployment is 5.8% at the moment, if you change that participation rate to compare it to Australia, the actual level of unemployment is about 7.8%. So they've got further to go than we have, and the labour participation is lower. So Jay Powell was asked about this, asked about the lower level of labour participation. And he said there were three reasons. And what struck me about the way he answered these questions was he shows you like the high level of political deafness the guy has got in dealing with particular political issues. He said the first reason that the participation rate is lower in the US than it was in 2019 is because these people have lost their jobs and it takes them longer to find new jobs. Well, I guess that shows the genius of JobKeeper in Australia, that we kept people in the same places until they could be employed again. So that's one reason our participation rate is better than theirs is. The second one, he said very deftly, I thought, was the issue of childcare. The Australian school system has handled the crisis differently than the US school system. In the US school system, the private sector schools the private schools went back to in-person classes last summer. After all, the possibility of children infecting each other is really very slight, and the possibility of children transmitting the disease to teachers is very, very slight. But in the US, even though the private sector went back to in-person schooling, the public sector didn't. Now, the political background here is the public sector teachers union is very much part of the Democratic Party machine, and they've been holding out for bigger spending packages from the Democratic Party, which they've now got. And in the last major spending package, and as a result of that, the public sector will go back to school, go back to in-person teaching after the current American summer, which means basically August, September this year. Now, what that means in the US is that those kids have been at home, and a lot of parents have had to be minding those kids as they did their Zoom meetings, a much higher proportion than is the case in Australia. And as a result of that, those people haven't been available to participate in the labour force. So that's the second reason he talked about was childcare, and he said that problem would come to an end after all these children went back to school in the second half of this year. And the third thing he talked about was, which was also he dealt with very politically deftly, was the issue of high unemployment benefits in the US, because high unemployment benefits are much higher than they are in relative terms in the US than they are in Australia, and that's again because of the last stimulus package, which was passed by the Democrats through the Senate. And there's a really good article about that in today's Wall Street Journal by a guy called Casey Mulligan. And Casey Mulligan was on the White House Council of Economic Advisors. So those three reasons. Anyway, what he said was but that all comes to an end, that difference, that extra stay-at-home payments all comes to an end in September. So that means is that what you're going to get is the participation rate will rise again to where it was before, but even so, what you get is unemployment in the US economy. That employment growth in the US economy is so strong, Joe Powell said, that you get unemployment down to equal to the long-time low record of 3.5%, which was achieved under the Trump regime. So that means we will have achieved the 1960s level of low unemployment of 3.5% twice within, say, a 5-year period. And that's a big change in terms of the outlook for the US economy, because the previous business cycle in the US took 10 years. The business cycle in the 1990s took 10 years. And that's a standard kind of thing when you're recovering from major recessions. But if you're running a much shorter business cycle of 4 or 5 years, as they did in the 1950s and the 1960s, then your economy is what you're aiming for is more or less permanent level of boom, okay? So we are looking at a completely different era in the US economy where we have very low levels of unemployment as the target, and a much shorter business cycle, and therefore a much shorter stock market cycle than we've been used to for an extended period of time. And Joe Powell was capturing this in this concept of the fact, I'm trying to tell these journalists that what's really different about this cycle is not inflation, it's that employment growth is so strong, we are going to get down to these historic low levels of unemployment really, really soon. And that's the major difference about what we're looking at now, not what the media was looking at.